Welcome to One and All Present here. Today we're going to be talking about bank frauds and fraud prevention measures. I'm AKSHY VARSHANTH and here is with me ARAVIND. In recent years, India has witnessed a concerning surge of bank frauds. According to the Reserve Bank of India, in the past years, the number has spiked up by 15% in the past 2 years alone.
That's right, Akshay. The rise of digital banking has opened up new avenues for fraudsters, phishing attacks, identity theft, and social engineering scams has become prevalent, targeting unsuspecting customers.
Yes, in fact, in 2002, major Indian banks faced a cyber attack where hackers used malware to compromise the bank systems and access sensitive customers' data, resulting in financial loss and damaged trust.
Yes, let's look at some recent case laws in India which shook banking sector at whole. The first one is Nirav Modi case, which is popularly known as the PNB fraud case. In 2018, he scammed around 11,400 crores, which is about 1.8 billion dollars, and it mainly took place in single branch in Mumbai. The PNB is the second largest public sector bank in India. To comprehend the modus operandi of this grand greedy plan to defraud a leading public sector bank, it is necessary to understand the letter of undertaking (LOU). First, for it was the unauthorized LOUs granted to Nirav Modi and company by corrupting PNB of employees, basically PNB officials, that helped Modi to run away with thousands of crores. So LOU stands for letter of undertaking, which is a form of bank guarantee. LOU allows LOU receivers to raise money overseas. So basically, LOU is a bank gives a guarantee to you that you can lend money to him. So PNB gave a guarantee, gave a letter of undertaking to Nirav Modi, multiple LOUs to Nirav Modi, that Nirav Modi took loans from foreign banks, and basically PNB gave assurance to it.
Okay.
So before taking an LOU, before bank giving a guarantee, bank should will get a collateral like a fixed deposit, a property, or a set a credit limit to a LOU. But LOUs gave cheap buyers credit for short-term purposes.
Yeah, this case exposed vulnerabilities in banks' internal controls and raised questions about the effectiveness of auditing process in general. It prompted a series of reforms to strengthen risk management practices.
The fraud orchestrated by a group of employees, in conclusion with the business tycoon, had a massive impact. The bank faced severe financial losses, and other financial institutes became wary by lending to it. Moreover, it damaged the reputation of entire Indian banking industry globally.
Indeed, it also affected several small businesses, individuals who had legitimate transactions at the bank, and so on. Many found themselves facing a financial hardship and uncertainty.
Yeah, there's one more case in recent times, which is Yes Bank crisis, where regulators, which is RBI, intervened. Intervention became very crucial. RBI superseded the bank's board, citing governance and compliance failure to protect the depositors' money and interest.
Yes. During this crisis, customers faced restricted access to their funds, leading a panic to rush and withdraw their money. from the bank. It impacted businesses relying on bank for their transactions and raised concern about the stability of other banks too. Yes Bank is one of the biggest banks in India. India has both public and private sector banks. And Yes Bank faced a hard situation during the year 2020. On March 5, 2020, a 30-day moratorium was imposed on Yes Bank by RBI, superseded by the private sector lender board, and appointed Prashant Kumar as the administrator over it. During this moratorium, depositors were allowed up to 50,000 rupees from their each individual accounts. Further, the main objective of the Reserve Bank of India or the Government of India is to safeguard the money of the depositors.
The factors contributing to banking frauds, to understand the root cause of the banking frauds, we must explore the factors contributing to banking frauds in India.
Yes. Talking about the factors contributing to the banking frauds, lack of awareness among customers about cybersecurity, best practices make them susceptible to phishing and social engineering attacks.
Additionally, weak internal control and inadequate employee training creates an opportunity for insider involvement in fraudulent activities.
Yes. The growth of digital transactions demands continuous innovation in fraud prevention measures to stay ahead of the tech-savvy fraudsters.
To combat these frauds, Indian banks and regulator, which is RBI, has implemented several preventive measures like Central Fraud Registry, which is CFR, based on the fraudulent monitoring returns to be filed by the bank and the select FIs. The same has been made available along with updates to which bank has been allowed access through user ID and passwords. CFR is also a searchable database that is accessible all over the internet. Then RBI circulars provides a guideline for reporting fraud to police and CBI. When dealing with the incidents of fraud or embezzlement, a bank should be driven not just to desire to recover the funds as quick as possible, but also by the public interest and the need to ensure the perpetrator must be brought to justice.
Yes. The RBI issued guidelines in implementing the two-factor authentication for online transactions, reducing the risk of unauthorized access as a whole. Frauds, deceptions, robberies, and other types of crimes were the prime source of concern for the banking sector. While the banks bear the main responsibility for fraud prevention, the RBI has counseling banks on significant fraud-prone sectors and the precautions required to avoid fraud on a regular basis. Banks are also being given information on unethical borrowers and linked parties who have committed bank frauds so that they would be cautious when dealing with them. To help with this continuing process, banks must provide a detailed information concerning frauds and the actions taken in response to them by the RBI.
RBI introduced you have mentioned the two-factor authentication, right? The RBI have introduced a POS2Pay system, which RBI requires a account holder to verify high-value checks and enhancing fraud detection in check-based transactions. Furthermore, RBI has set up a centralized fraud monitoring cell to track and analyze banking fraud data and enabling bank to learn from past incidents and strengthening their defenses. And some banks have incorporated AIs and machine learning technologies in their fraud detection system to identify patterns and anomalies in real time.
Yeah. Collaborative efforts between banks, law and enforcement agencies, and cybersecurity experts have been crucial in tackling the banking frauds.
Education plays a vital role in preventing banking frauds. Banks must conduct regular awareness campaigns to educate customers about various fraud schemes and precautionary measures.
Additionally, comprehensive training programs for bank employees will help them recognize red flags and respond effectively to potential financial fraud attempts. Let's shed light on India's legal and regulatory framework to address banking fraud. Indian Penal Code and the Information Technology Act 2000 in the year 2000 provides a legal basis to prosecute banking fraudsters. The Banking Regulation Act empowers the RBI to supervise and regulate and to ensure compliance with the anti-fraud measures. The Insolvency and Bankruptcy Code also plays a significant role in addressing the loan default related frauds.
To conclude, addressing the banking fraud requires a collaborative approach involving a regulator, banks, customers, and technology expert. By staying informed, adopting preventive measures, and fostering a culture of transparency, we can safeguard finances and integrity of banking system.
Thank you for joining us this insightful journey. And this is AKSHY VARSHANTH, and with me is your ARAVIND.